Welcome back. So tune into Market Sense, the biggest economic extravaganza of the year, the World Economic Forum, and that is underway in Davos. Supriya Srinath now in conversation with Martin Gilbert, CEO, Aberdeen AMC.
For that. And yes, Martin Gilbert of Aberdeen is one of the largest investors in Indian equity markets. He's a believer in the India growth story. Let's see if his faith is intact. Thank you very much for speaking to us right here at Davos. It's been snowing at Crazy, but thankfully it's not snowing right now. Let's begin by asking you your outlook for 2018. Everyone is playing this guessing game that the 10-year bull run has been on for a very, very long time. There hasn't been a significant correction. When is it likely to be?
Well, I wish I knew. I think if there is a correction, it won't be a deep correction. I think the problem is everyone thinks markets are too high, but against that we have a pretty benign growth economy in the world, with only 6 countries in the world not growing. So growth is going well, and nowhere do we see it better than India.
Absolutely. I'll talk to you about India in just a bit, but what is the one indicator that we need to be watchful for that correction to happen? It's heartening to hear from someone like you that the correction may not be very deep-seated, but what is that one one cue that you'd be looking out for?
I think two. Probably the thing that's probably the most worrying is the level of leverage in the world at the moment, and probably if US inflation rises faster than we think, that would lead to a tightening in the US. So that would be the indicator I would probably be looking for. But against that, corrections usually come from something unexpected, something out of left field that no one's thought of. So so it will probably be something we haven't thought of.
So the unknown devil is something that we need to be careful about, but we can't be careful enough. You mentioned India as a growth story, and obviously there are a lot of people in Davos talking about India. The Prime Minister is there. Let me first ask you, this is the first time in 21 years that an Indian Prime Minister is going to be addressing the bunch of most powerful people in business, the large global investors. What is your broad expectation from Prime Minister Modi today?
I think he probably just wants to tell the story of India and how well it's doing to the global stage. So I think that's it. He'll probably, a bit like President Trump later in the week, he'll be saying what a great job he's done, and markets are doing well.
Indeed, you know, markets in India are doing rather well. In fact, both the Nifty and the Sensex have hit lifetime highs as we speak. A lot of people out there believe that growth or the economic fundamentals don't really match this euphoria. Earnings are still to catch up. Do these things make Indian markets vulnerable?
Yeah, I think there's probably a bit. I think the Indian market, which is probably our favorite emerging market, is probably higher than we would like. But it's a market you have to be in, so we're staying invested. We especially like the bond market with you know, 10-year government bonds, local currency yielding 7.5%, and we're seeing a lot of flows into the bond market with the improving economy and improving ratings as well for the country.
You know, you mentioned interest in the bond market. It's actually, it mirrors what a lot of FIIs have done in 2017 as far as India is concerned. They've sort of evaded India, and the bull run largely is led by domestic investors. What will take global investors like yourselves to flock the Indian market back? Will it be higher earnings?
I think yes, once we see the earnings coming through, and probably lower markets as well. So any correction is going to be welcome, I think, because I think valuations are too high. A good example is our joint venture with HDFC Life in India, and 6-7 times book, and you know, insurance companies in the rest of the world are on 1 times or 2 times.
True.
So, you know, we are looking at stretched valuations, but against that, of course, the company is growing fantastically. So it's that growth prospects in India that people are really interested in.
So let me just deviate away from growth and talk to you about reforms that will fuel that growth. It's been 4 years since Mr. Modi has been in power. He's addressing the elite here, obviously making a big splash for India. What has been your assessment of the reforms undertaken? There's been a rollout of the GST, but what is it that you assess, and what is it that you would like the government to do to draw more investment?
Well, I think he's done a good job on bureaucracy, and I think that's where he's got to continue focusing. Because if he can cut bureaucracy in India, it will, the economy will grow even more than it already is. So bureaucracy is where I would like to see him concentrating.
Like the US, where the corporate tax rates have been cut, there is also this big demand that corporate tax rates cuts will perhaps fuel investments. Do you share that ideology at all?
Yeah, look, I'm a great believer in lower taxes. You get more revenue. The higher the tax, the revenue take declines. So I think what Trump has done in America is going to fuel the U.S. economy hugely, and the return of money to the U.S., such as Apple returning 20 billion, creating 20,000 jobs,
right.
That sort of thing is really important. We're seeing it in China as well. Definitely the government there are encouraging people to repatriate money back and invest in their own country.
You know, when you talk about India, which are the pockets in equities that excite you? Which are the sectors that you'd be bullish on at this point in time?
Well, let me start by saying I'm a hopeless stock picker, but I do like you know, our big holding we've got in Unilever Hindustan. I think it's a very good company, and really probably the jewel in the crown of the Unilever empire. I obviously like HDFC, where we have an investment there. We like the private banking sector because that tends to reflect growth. We like Hero, that's a good holding of ours. So all of these sort of blue chips, really. And but as I say, I'm a hopeless stock picker. So please don't.
Why I asked you that question on sectors is because the government has undertaken a lot of reforms to clean up the balance sheets of Indian banks.
Yeah.
You know, the whole insolvency code, referring companies to that. Do you believe this will this makes banking more attractive, or do you believe there is a certain pain that banking will go through before things get better?
I think you have to divide banks into two different sectors: the public and the government-owned, or the government ones governments have shareholdings in, and what I would term the HDFCs and the ICICIs, and that would certainly help if they brought in those sort of reforms and made those banks more commercial, shall we say.
You know, I'll take a quick question on oil. Oil at 65, 70 is worrying a lot of people. People believe that this could be inflationary, whereas of course for the oil producing nations it's a great thing. I mean, great news coming after a while. What's your scenario on oil? Do you believe oil can potentially fuel inflation in the world?
I don't think so. I mean, I think a bit, but people tend to disregard inflation caused by oil. But certainly from the UK's point of view, the higher oil price means we'll see further exploration in the North Sea, which will be good for my house in Aberdeen.
Absolutely. But the geopolitical risks that the world is seeing, whether it's in North Korea or in the Middle East, are these worrying factors for investors like yourselves? Or do you believe these are factors that the world will perhaps live with over the next few years and will not potentially disrupt the growth story?
I don't think people are paying enough attention to these potential geopolitical risks, and we're seeing that with this very low volatility in the market and complacency. So my worry is there's too much complacency and people are just not factoring in any geopolitical risks at all. And it may be something like that that causes a correction in markets.
You know, I'll take a quick last question. As one of the largest investors in India and somebody who's a believer in the India story, I know you said you're a hopeless stock picker, but if I were to ask you of 3 recommendations with the budget right around the corner, what would those be?
Oh my goodness, that's a terrible question to ask me. Obviously our joint venture with HDFC in the life sector. I do still think Unilever Hindustan is a great company. And Hero, I like Hero.
And on the policy front, what are the big changes that you would like to see as an investor?
Just bureaucracy. Try and do away with try and ease the bureaucracy, and the growth will come through. And if there's room to lower taxes like the US, that would also be very good.
Martin Gilbert, thanks very much for speaking to us right here at ET Now. That's Martin Gilbert of Aberdeen speaking to us right here at ET Now in Davos. It's back to you in the studios.